Hey guys, John Paulamy here, Actionable Intelligence. Today's Saturday, July 6, 2019, and this is a weekly market update. I hope everybody had a great holiday. This turned into a four-day weekend for many people. I hope you're enjoying it. You know, I just put out the recent edition of my newsletter, and one of the things I noted was that we're kind of in the summer doldrums, if you will. The sell in May and go away, you know, that type of sentiment. You know, a lot of people are on vacation. A lot of people at company managements are not really doing anything. They're on vacation. People in Wall Street are on vacation. So a lot of times we don't have a lot of news or a lot of events that can influence the prices of stocks like we're used to. So lots of stuff happening, you know, out there. Vacations, baseball, you know, hanging out with friends, just enjoying the great weather that we're having, and you know, takes your mind off the you know, this financial matters. Kind of like, you know, I was reading some stories about when Columbus and the ships were coming, you know, and some of the early explorers to America from Portugal and Spain, when they were coming across, they'd get stuck in the Sargasso Sea with all the seaweed, and they'd be in the summer doldrums, and they just no wind. They'd just be lamenting the fact that they couldn't make any forward progress. And that seems to be the case sometimes when we're dealing with these markets, and how boredom, it's one of the things I talked about in this month's newsletter, how boredom can overtake people. And you really have to be careful of that because, you know, when you have these speculative positions, you have them for a reason. You've done the research, you understand or have a view of why a particular asset is mispriced, and what you think will be the catalyst that leads to a change in sentiment and a repricing higher. And it doesn't necessarily happen on the timeline you want it to happen on. You just, you know, you have to wait, and people get bored. And this is really a big detriment to a lot of people. I mean, they just cannot sit still and wait for things to play out. They get bored, they want to do something. You know, with the advent of the internet and online trading, it's very easy, even from your mobile phone, just to go on and buy and sell stocks. And all you're really doing is, you know, running a lot of churn. And so I think you really need to take into consideration, you know, the boredom factor, and the fact that, you know, if you have conviction of your research and you understand what you're doing and why you're speculating or investing in a certain company or sector, then you know, you just have to psychologically kind of compartmentalize that and just keep it on the shelf and, you know, wait for it to happen. And that's one of the things I wanted to talk today about in the reality check. You know, I follow this one gentleman online who runs the L2 International Opportunities Fund, and they have a podcast, and they put out their you know, letter to their shareholders, to the public. And the recent letter I will put in the show notes, but, you know, this is in respect to the uranium market. I've gotten some emails and some comments like, why don't you talk about uranium? Because there's nothing really to talk about. That's why I don't talk about uranium. I mean, I don't know what's going to happen with the 232 ruling the Trump administration is going to make. I don't know if it's going to be positive, negative, if it's going to influence the market immediately, or if it's going to take time. I have absolutely no idea. No one else does either. And I think this is a lot of, you know, I hate to say this, you know, mental masturbation, sitting around, you know, speculating all the time, or wringing our hands about what's going to happen. I mean, I want to kind of go back to what the fundamentals were in this letter that the management of this fund put together, and I think it just takes you back to the basics. You know, you know, 4 factors that are going to lead to a once-in-a-lifetime opportunity. And, you know, one of the things they said in the letter is they kind of said the same thing. You know, 232. I mean, who really knows? And, you know, it's a lot of speculation and a lot of, you know, trying to guess the future. And instead, what they said in the letter was they'd rather just stick to the facts. And the facts are that, you know, they had four factors that they believe are going to drive this market. And it's the increase, and they go into a little in depth into why these facts matter. You have the increase in demand for uranium. We know that. A decrease in uranium supply. A metal price that is well below the cost of production. I mean, the incentive price is so low that no new capital is coming into this uranium market. The uranium market is in liquidation. And that means we're just living off the previous investment cycles, and we're liquidating the known production and reserves that have been found during previous investment cycles. So no new mines are being built, and metal price is well below. Oh, I did this twice. The other one was the metal price doesn't really matter to the utilities. Just disregard the double statement there. But the metal price really doesn't matter to the utilities. If you spent, $2 or $3 or $4 billion on a nuclear power plant, it doesn't really matter what the fuel cost is. You have so much of sunk cost that if the uranium price is $40 or $80 or $120 a pound, it doesn't really matter in the big scheme of things of keeping that reactor running. That is, the main objective once you have that sunk cost. So I like what they said during an interview they had. They put this in the end of their letter. Said, "We think this is a bet already won. One just needs to have patience and wait." And I've been saying that all along. I mean, if you understand what's going on here, if you've done the research, if you understand the supply-demand dynamic, I mean, you just don't know when it's going to kick off. You just have to wait. And, I mean, I use the analogy of the early 2000s gold market. I mean, I'm following the same tack that I took then that worked out very well for me. I had no idea. I kind of had a suspicion that gold was undervalued, and I just kept stacking. I mean, I just kept, whenever I had new funds come available, I just bought more gold and kept stacking gold and silver bullion. And, eventually it turned out pretty well. Gold pretty much went from, when I started buying it, from about $250 or $275 an ounce to, $1,800 or $1,900 an ounce over a decade. So I think we're in a similar situation. You don't really know what's going to happen. You just, if you understand and this is what you want to do, you just have to keep stacking, and you just buy quality companies and just keep adding to your position on any weakness where you get new funds. And I think this turns out well for you in a few years. So this week I wanted to talk about the BP 2019 Statistical Review of World Energy. This is a really great document that comes out each year around this time. I'll put a link to it, and I think this will dispel a lot of the nonsense that I kind of see a lot. I mean, the facts are the facts, and it doesn't really matter what you think personally or what you think might happen. The reality is reality on the ground, and this thing about energy is something that I keep harping on. I mean, energy underpins every activity that we do in modern society. And I think people take for granted the availability, the ubiquitous nature and cheap nature of energy relative to, our ancestors. I mean, a couple hundred years ago, people were relying on wood and then we went to coal, petroleum, and now nuclear age. And I've said this before, energy gets more dense. And as societies become more sophisticated, as they become wealthier, they require larger and larger energy inputs. And in the West, we've taken that for granted. 330 million people in the United States, 450, 500 million people in the European Union, modern societies, whatever the population of Japan, Canada, whatever. But you have large swaths of population around the world who are just now entering their S-curve, if you will, their big uptick in energy usage in India, in China, in other areas around the world. I mean, Africa is a footnote. 600 million people, one of the fastest growing populations on the planet, and the energy usage is almost an asterisk compared to everything else. It's not even relevant right now. So what I'm saying to you is that the energy pie is going to get larger. The pie of energy required and consumed is going to grow every year. And that's what the Statistical Review indicates. It also breaks it down into the various types of energy. And one of the things you will note is that regardless of what people think or what they want, oil and petroleum are going to be with us for decades and decades and decades. They just are so cheap and ubiquitous, they're just not going to go away as quickly as people think. And I think once you look at the actual facts and you look at what's actually happening, you will see that the potential that is out there. And I think a lot of people look at the short term, that, the recent zeitgeist that, petroleum's going to die, EVs are going to take over, who would ever invest in offshore oil? These type of sentiments, they're misplaced. They just are not accurate when you look at the facts. And we'll go into that. Let's take a quick look here, at some of the things that I pulled out of the Statistical Review commentary. Like I said, I'm going to put a link to it in the show notes, and I think it's worth perusing because it breaks it down by country, by energy. I mean, there's a wealth of data. You can spend a couple hours looking at this thing, and it's really, I think, will open your eyes if you're not really familiar or really understand energy supply and demand. Basically, highlights primary energy demand growth in 2018 was 2.9%. Okay, so the pie is growing. For demand is growing, double its 10-year average of 1.5% per year, and the fastest growth since 2010. And why is that? Well, I just mentioned it before. You have India and China with a combined population of close to 3 billion people are entering their S-curves. They're getting wealthier, they're industrializing, they're urbanizing, and their energy use is going to increase. And it's not going to be supplied simply by solar and wind. So you're seeing, as these countries get wealthier, people, what do? They buy a refrigerator, they buy an air conditioner, they get rid of their bicycle and they buy a scooter, or they get rid of their scooter and buy a small car. They don't just park the thing in the garage, they actually use it. So it's just like you or anybody else, if you get wealthier, you tend to buy more things that consume energy to make your life easier and more comfortable. I thought this was interesting. Energy consumption growth was driven by natural gas, which contributed more than 40% of the increase. All fuels grew faster than their 10-year averages. And I think this is something that people are really missing. The world is getting wealthier. The emerging and frontier markets are now entering their hockey stick for energy demand. It's going to be relentless. It's going to happen. That's why you're seeing China and India and these countries move to nuclear, to huge power sources that can be brought online and that are, going to afford them the supply that they need to meet the demand that's happening. That's going to be relentless over the next several decades. Oil consumption grew by an average 1.4 million barrels per day, or 1.5%. China and the U.S. were the largest contributors to growth. And I would put India in there too. They didn't really talk about it, but it was about 350,000 barrels per day in growth in India. And, I think with the exception of a global economic recession or depression, you're going to see this growth in the energy demand happen. And I'll show a chart at the end of this video where you can see the demand growth over the last decade, and you can see the sharp pullback at the 2008 great financial crisis. But energy demand rebounded very quickly after the crisis. So, I mean, you could have these temporary pullbacks in demand based on some huge, psychotic break in the markets and economies. But in the end, people, the ascent of man continues with the upward slope of man's development from the lower left to the upper right. And you have these small blips along the way, but in the end, the demand for energy is going to increase. Global oil production rose by 2.2 million barrels per day. Almost all of the net increase was accounted for by the U.S., with their growth in production a record for any country in any year. So I think this is interesting because I think this ties into what I've been saying or what I've been forecasting. It's really great that the United States has been able to increase production. It's increased production more than any of the pundits ever thought we would be able to do. But how has it done it? It's done it on the back of a massive amount of debt, $360 billion in high-interest junk debt, Most of the companies are not profitable or even cash flow positive at any oil price. Even when oil was $100 a barrel, most of these companies could not cash flow and cannot remain profitable. So what are we seeing? We're seeing shareholders now are saying to these companies, we don't want you to grow production for the sake of growing production. That's what the managements were rewarded on doing. They're telling them, hey, look, we want you to live within your cash flow means. We want a return on investment. We want stock buybacks. We want dividends. And, the days, I think, of relentless growth based on debt supplied by private equity firms and hedge funds and Wall Street, I mean, they're getting sick of it too. There's no return. We're seeing, bankruptcies again. So we're seeing some of the major oil companies out there. Pioneer was one. They said they're going to pull back on their drilling. They're one of the major producers. Another guy that left a major producer said that the shale's been a disaster financially. It's just destroyed capital is what it's done. So I'm not sure how you increase shale production and make up the demand growth and the worldwide depletion of oil just based on that financial model. Maybe it can continue. Maybe it will continue. It's hard to say. I don't know for sure. I don't see how it can. That's one factor. The other factor is the depletion rates. As the supply growth continues in these shale plays, they deplete so fast that you have to drill an ever increasing amount of wells just to stay even with the production that, if you've increased production by 2.2 million barrels a day, you're having huge decline rates in those drilled wells. You have to drill more wells just to maintain the production and even more wells to increase production. And when you juxtapose that against the capital restraints that I think that are now coming to this market, I think that's going to pull back. And I think what's going to happen in the investment thesis that I've been holding to is that, we've ignored a lot of non-OPEC conventional oil production because shale has just been going gangbusters for the last 5, 6, 7 years, and it's really crowded out a lot of investment into those other non-conventional oil sources like offshore, which supplies 30%. And there's been tremendous underinvestment in the non-OPEC conventional oil sources because of the shale response that we've seen. And if I'm correct in my thesis, which I believe I am, I mean, the investment in the junk bonds is not going to continue. $350 billion has to be rolled over the next 3 years. How are you? And then you're on the Red Queen's treadmill of ever increasing completions just to maintain production, much less increase production. I mean, I guess it can continue. There have been advances in the technology, but the question is, will they be able to overcome the depletion and the pullback in the, basically unlimited amount of funds that were provided to this industry? So we'll have to see. But that's my thesis, that that's not going to happen. And when it doesn't happen, and the IEA has been warning about this, is that the lack of investment that hasn't happened because of the shale crowding out the other conventional oil production, we're going to possibly see a issue with oil supplies in the next couple years because that investment didn't take place. And as I've showed you, and you can see in the statistical review, oil demand is relentless. It's going to increase every single year. And it's going to, it's actually surprising to the upside, just as I've said, that we have 3 billion people basically entering their S-curve of increasing energy demand growth. I thought this was interesting. We in the West have demonized coal, a energy source that basically facilitated and built this country and built the West. We've demonized it. We're trying to get rid of it here in the West, but it is serving its purpose as it served here in the West when we used it. It is a cheap, ubiquitous, easily used source of energy, and coal consumption grew by 1.4% last year, double its 10-year average growth. And as I've said before, as long as the world economy is not in some financial crisis or general global recession, you're going to see relentless energy growth. In order to grow the economy, it requires higher and higher energy inputs. That's why you're seeing all forms of energy growing. That's why the pie in total is growing. Um, Consumption growth was led by India and China. Here we go again. I mean, this is all pretty obvious what's happening. OECD, and the OECD is obviously the Western, economies, the Organization of Economic Cooperation and Development. That's your United States, Europe, Japan, basically your developed countries. Coal demand fell to its lowest level since 1975. Yeah, it's been pushed out by natural gas and the general environmental concerns that have surfaced over the last decade or so in the United States and around the rest of the Western world. I thought this was fascinating. Nuclear generation rose by 2.4%, its fastest growth since 2010. China contributed almost three-quarters of global growth, with Japan the second largest increase. And obviously the Japanese increase is from restarts of shut down reactors because of Fukushima. But you can see, this kind of plays into what we said at the start of this video, that nuclear power is growing 2.4%, and you have no investment going into new uranium fuel. So you can see what's going to happen. Electricity generation rose by above average. We keep hearing this above average energy growth. I mean, you really get fixated this in your mind. We're talking about the trade disputes and the end of the world, but in the end, people are trying to better their life. People are pursuing their own self-interests, and if they can, they're going to improve their life and make their life more convenient, and that requires higher and higher energy inputs. So electricity generation rose by an above average 3.7%, buoyed by China, India, and the U.S. Here we go again. We keep hearing the same two countries, China and India. Renewables accounted for a third of the net increase in power generation, followed closely by coal and then natural gas. The share of renewables in power generation increased from 8.4% to 9.3%. Coal still accounted for the largest share of power generation at 38%. And I don't think most people even understand that. That's a potential. That's why, I've talked about like a company like Peabody Coal. I don't own it, but, it's going gangbusters. They're minting money because what are they doing? They own assets around the world. They own assets in the U.S. They're exporting coal. Coal is still a growth industry around the world, besides the U.S. in the Western countries. In the emerging markets, they are using coal not because they want to poison the earth, not because they want to kill people, because it's cheap, ubiquitous, and they are trying to industrialize. The faster that these countries industrialize and become wealthier, the faster that they will start moving from a growth initiative at all costs to a more of a view like we have, where we were trying to make things air quality, water quality. When you're a poor people who are struggling, your concerns are not air and water quality. Starvation and heat and light, things like this, refrigeration, these kind of things matter. And the political dynamic in these countries is that the governments have a mandate. They have to provide rising living standards, and they're going to do it on the back of coal. We did it, yet we tell the rest of the world they can't do it. And it's going to happen regardless of what Greta Thunberg says or the radical green parties in the West. These countries are going to continue to do what they're doing. So you can make your stand and not invest in them, and if that's how you feel better, that's fine. That's good for you. But I'm just telling you what's happening. These are the facts. Facts don't care about feelings. So I guess it comes down to, when you really read the BP Statistical Review, the main thing I take away from it is world energy demand growth is relentless. And I've just explained why in a nutshell. These populations are very huge. They are just now leaving the launch pad of poverty and moving into the lower and middle classes. And like I said, as people urbanize, as people's economies become more sophisticated, as they grow, they require larger and larger energy inputs. And this has now been going on. It's going to continue. Now, you can see even when we had the GFC, I mean, world energy consumption barely went into the negative, and it just stayed there for, barely like a year. I mean, so what I'm telling you is that you're going to see this continue. as these places and these people, billions of people, become wealthier. The other thing I think that becomes very, very apparent very quickly is that the demise of fossil fuels is extremely exaggerated. I mean, you can see here in the green, this is oil demand. You see it increasing. This is natural gas. And here's coal. I mean, this little orange thing right here, that's renewables. So I'm not saying renewables isn't going to grow. It will continue to grow, but it's going to be a long time before coal, natural gas, and oil are supplemented to a tremendous effect by renewables. Renewables obviously is a growth industry, but it's going to be hampered by some other things coming up too, like space, the political will. People, the zeitgeist is starting to change against specifically wind. I mean, people don't want these things around them. And you're eventually going to run out of spots, and then what's the government going to do? Is the government going to force these things on people? I mean, it's going to be interesting to watch. And how can you grow this to the size of coal, for example, or oil? I think people are very naive if they think that that's going to happen. And if it does happen, it's going to take decades. These energy transitions will take forever. And, let's look at nuclear energy. It's really the area that can really supplement coal and natural gas. And I think that a lot of policymakers, like in India, China, Russia, these places, emerging markets, we talk about a lot about with technology, you saw it as emerging in frontier markets maybe 20 years ago when they were getting their telecommunications squared away. It was very profitable at one time. I made tremendous amounts of money as state-owned emerging market and frontier market telecom companies were privatized. And as the technology for mobile and cellular basically came to the forefront, became cheaper and more ubiquitous, a lot of countries and a lot of places didn't even wire up for landlines. I mean, they just leapfrogged past that into mobile and cellular technology. And I think something similar could happen here with nuclear power. You see the zeitgeist starting to change. People are becoming more open to nuclear power. And I think that in a lot of places, you can throw up coal plants, natural gas plants fairly quickly, but I think a long-term policy for air quality and lower costs, people are going to be looking to, especially in places like China or India, where you have large populations and huge energy demand requirements, you're going to see, I think, nuclear maintain its growth trajectory. I mean, you're certainly not going to power an economy like India that's growing at 7 to 8% a year. And it'll be doing that for decades based on solar panels and wind. It just won't happen. You just can't do it. So, your choices then are reduced to coal, nuclear, and natural gas. And I think that when policymakers look at that, obviously they're not going to fixate on one energy source. But I do believe that the facts are playing out in our favor as we see more and more new plant builds happening. And it doesn't really matter. I try to make this point to people when they talk about it. You got to look at the globe in total. You cannot just look at the United States and Western Europe. It doesn't really matter that Germany's shutting down some plants. It's irrelevant because over the next 10 to 20 years, dozens of more plants are going to be built in these emerging markets. So it's just going to, the West is just going to become less and less relevant as it applies to energy demand and supply, just because these other populations are so huge. You're just going to supplement the sheer numbers. I mean, you can spreadsheet this out and do the growth projections. It might be something I might actually take on just as an exercise. I did it about 10 years ago, and I actually came up with a number around this time of around 100 million barrels of oil demand, and at that time I didn't think that the world could get there. So I probably need to sit down and redo that. As we know, we easily supply 100 million barrels a day of oil. So that's it. That's the BP Statistical Review, kind of a short synopsis. I'll put a link to it. I really encourage you to take a look at it. It's really fascinating. The IEA actually comes out with a similar study, I believe, in the fall. I'll go look for that in previous issues. But I think that I always look forward to reading the BP Statistical Review, and it really helps shape my views, because once you really look at some of these things and pay attention, you realize where the potential is and how energy underpins everything, and how energy is just necessary for life. So that's it for this week. Thanks for listening, and we'll talk to you next week.